So I really wanted to make a gamma options tutorial video because I feel like the other videos that are out there really complicate things needlessly. Simply put, all gamma is it shows you how much delta is expected to change for every $1 change in the price of stock that the options represents. And if you're not sure what delta is, please watch the delta tutorial video that I made. I'm going to link it in the description. Delta represents how much an options price is subject to change with every $1 move in the underlying stock price. So gamma gives a lot of helpful insights into how fast delta is going to be changing. Is it going to be accelerating? Is it going to be decelerating? When option approaches its expiration, there's a really sensitive time for delta, and this can be very important, and gamma could be super helpful in helping you understand the picture and how to use that in the strategy that you're using, which I will make future videos on. But you have to know that there's gamma risk that occurs closer to expiration, especially if you're near the money or at the money at your options contract. But we're going to cover all that and more in this video right now. And if you have any questions about gamma and how it pertains to options contracts and why is it a derivative on top of a derivative, because remember, the other Greek letters, they're just monitoring what's happening with the options price and the price of the stock versus something like gamma, which is actually monitoring delta. So it's like a layer 2 Greek letter. So we're going to discuss all of that. Ask any questions you want in the comment section. This channel is still small enough. I respond to every single comment that I see come through. So let's jump into the nitty and gritty of gamma in options trading. All right, so take a look here. Since delta expresses the probability of an option finishing in the money, which means it's profitable, gamma can give insights into how stable that probability is. In other words, how stable delta is. Because if gamma is high, it tells you there's a good chance that delta is not really stable, meaning it may not be a reliable predictor in that situation. Gamma also helps you understand how fast your gains or losses may accelerate. So take a look at the delta of a long call option on a stock right here. So this on the left hand side is going to represent stock price below the strike price, and this is the strike price right here. So this would be stock price at strike price, and this right here would be stock price above strike price. So the horizontal axis represents price, and the vertical axis is going to represent the options delta number. And that makes a lot of sense because when you're using delta for probability, it's from 0% to 100%. So think of gamma as the slope of the delta chart. So the steeper the slope, the higher the gamma value, meaning the more volatile delta is. And if you remember from grammar school, when a chart line looks pretty flat, then the slope is going to be closer to 0. And when a stock chart is going up and is quite steep, the slope is going to be steep, so it's going to rise in value. And the fact that gamma is at its highest right here because the slope is going to be the highest, you can see that the slope of delta is the steepest at the options exercise price. Now gamma goes to 0 when delta is way out of the money, and that makes sense because the delta isn't really moving. If you're way out of the money, then your probability of being profitable on the options contract is really close to 0. And if you are way above the strike price, then it's going to be closer to 1. And if the stock price is well above the strike price, closer to expiration, like way above, deep in the money, this means that the delta is going to be closer to 1. And if the delta is closer to 1, it's going to be flat over here, which means that gamma is at 0. Now, if you've been following the GameStop fiasco that occurred in 2021 where there was a huge short squeeze, people were actually claiming that it might have been a gamma squeeze, which is a really interesting concept and factor in trading that you should know about. So comment below if you'd like me to make a separate video on it. But very simply, it's basically a situation where makers of the options market are forced into additional stock buying activity due to open options positions on the underlying stock. Many argue that a gamma squeeze is what occurred right here at the end of January 29th, 2021, when GameStop shares skyrocketed in price. And so I want to bring up this open options contract that I have, which I purchased at a price of $10.10, and currently I'm up over 80%, and it's a December 16th, 2022 $265 call option on Netflix. What that means is I am betting that the price of Netflix, which currently sits at $245, but when I purchased this option, it was, I believe, under $220. And that's why the extrinsic value of this option contract has appreciated so much to give me over 80% value. And I want to show you that it's a $265 strike price, and currently it's trading at $245. And since it's coming a lot closer to $265, it's going to be really interesting to see how Gamma changes, especially if there's going to be more upward movement. And me knowing that Gamma is going to be at its highest when this option contract strike price is at the money or close to what it's actually valued at. So hopefully this 245 comes closer to 265 in the coming days, and then I have to make some serious decisions because I will be up well over 100%, but I will also know that volatility is quite high, especially at the money. And these charts, understanding Gamma, understanding Delta, and understanding how Theta plays a role as well is super important. These Greek letters you have to know in and out if you want to have knowledgeable conversations with other options traders, or simply up your game as a trader, as an investor, or whatever you want to call it, gambling in options. If you want to get good at it, you have to understand these Greek letters. Now, again, I'm not selling a course. I am not some sort of guru. I'm just trying to learn with the rest of you, and I'm going to be putting out a lot more options trading content in the future. So if you like this type of content, please comment below which type of video or tutorial you wish for me to cover next, and I will see you all in the next video.